Ask a Western millionaire how they built their wealth, and they'll point to a stock portfolio, an index fund, maybe a tech startup they got into early. Paper. Now look at the old money billionaires of Bangkok, Manila, or Jakarta, and you'll see something that makes no sense to Wall Street. They hoard empty, overgrown plots of dirt in the middle of the most expensive cities on Earth, and just let them sit there. No building, no tenants, no dividend. Wall Street has a name for it: dead capital. But it isn't dead. Asia's ultra-rich know something about raw land that makes the stock market look like a casino. And once you see it, you can't unsee it. That empty lot isn't them being backward. It's one of the most rational bets in the history of money, and it's the answer to a question the West was lucky enough to never have to ask. I'm Daniel, and this is Asian Money Map, where we dig into the empires, the billionaire families, and the real money behind Asia. Today, not one tycoon, but a habit that runs through almost all of them. Why the moment an Asian family has real money, the first thing they reach for isn't shares. It's land, dirt. To understand Asia, follow the money. But to understand Asian money, follow the family. And almost every Asian family's money ends up buried in the same place. Start with how wide the gap really is, because the numbers are stranger than you think. In the United States, the average family keeps only about a third of its wealth in the home it lives in. And when it comes to the stock market, roughly 62% of American adults own shares in some form. Owning stock is just what you do. Now cross the ocean. In South Korea, around 65% of a household's wealth is tied up in real estate. In China, for years, the figure ran between 70 and 80%. And the stock market? In China, only about 13% of adults hold any equities at all. In India, it's around 7%. Sit with that. In the country the whole world calls a manufacturing and technology superpower, roughly 7 or 8 of every $10 a family owns is sitting in property, and fewer than 1 in 7 adults owns a single share. This isn't a fringe habit. It's how the majority of humanity's savers actually behave. In the West, you own paper. In Asia, you own dirt. And both sides quietly assume the other one just doesn't understand money. But the Asian side is not the naive one. To see why, you have to go back to the moment paper wealth revealed what it really was. It was the summer of 1997. The Asian financial crisis, known across the region as the Tom Yum Goong crisis, ripped through the continent. It started in Thailand and spread like wildfire to Indonesia, South Korea, Malaysia, and the Philippines. In the West, a market crash usually means your portfolio drops 20 or 30%. You hold on, you wait for the rebound, and life goes on. 1997 in Asia was not that. It was financial annihilation. Currencies collapsed almost overnight. The Thai baht, the Indonesian rupiah, the Korean won, all lost catastrophic amounts of their value against the dollar. Stock markets didn't dip. They went into free fall. Imagine waking up, opening your banking app, and finding the money in your account had lost half its purchasing power while you slept, and the companies you owned shares in were bankrupt because their foreign debts had just doubled overnight. In a matter of months, self-made millionaires were wiped out. People who trusted paper assets, who trusted the local banks, who trusted the exchange rate, lost everything. The corporate landscape became a graveyard. But do you know who survived? The families who owned the ground. In the darkest days of that crisis, a stock certificate was worthless. A bank balance was melting by the hour. But a prime block in central Bangkok, or a big undeveloped plot on the edge of Jakarta, that land did not evaporate. It didn't go bankrupt. It didn't get margin called by a hedge fund in New York. Its price on paper fell for a while, yes, but the dirt stayed exactly where it was. And when the dust settled and the economies began to rebuild, the people still holding the deeds held the keys to the recovery. That trauma is burned into the psychology of Asian wealth. A stock is a promise from a CEO. A currency is a promise from a politician. And promises get broken. Land is a physical fact. You cannot print more of it. You cannot dilute it by issuing more shares. When everything else is a promise, the ground is the one thing that simply is. But survival is only chapter 1. Because once the crisis passed, these families turned that defensive instinct into the most aggressive wealth machine on the planet. Let me show you the mechanics, because it's not sentiment. It's math. The first engine is leverage married to inflation. You buy property with mostly borrowed money, and your mortgage payment is fixed. But over the years, prices rise, rents rise, and the currency slowly loses value. So you repay a loan locked in years ago with money that's worth less every year while the asset it bought keeps climbing. In plain terms, inflation itself pays off your loan for you. Put real numbers on it. Buy a flat for $1 million, put down $200,000, borrow the rest. If that flat doubles over 15 years, ordinary in most Asian cities for most of the last few decades, your $200,000 didn't just double. It became over $1 million in equity because you kept every dollar of gain on money you borrowed from the bank. Now try that with stocks. A bank will rarely lend you a cent to buy shares. To buy bricks, they line up to hand you the money. And this isn't a hunch. Across the inflationary stretches of the last 40 years, real estate beat inflation in 6 out of 7 of them. The second engine is scarcity. You can actually see. They are not making more land. And in the dense Asian cities where the money piles up, that's not a slogan, it's a wall. Only about a quarter of Hong Kong can legally be built on. The rest is mountains and land the government holds back. In Singapore, most land is state-owned and rationed out. Cap the supply like that while millions of people keep getting richer, and the price of the little land that exists compounds for decades. That's why Asia-Pacific is home to 72 property billionaires, far more than the United States or Europe, and why Hong Kong's dozen biggest property moguls are worth around $119 billion between them, more than the entire top tier of American home developers. One city selling space. So the land makes money. Which raises the obvious question, why do they leave so much of it empty? Here's where a Western advisor gets it exactly wrong. Ask one about holding raw empty land and they'll call it financial suicide because of property taxes. In Texas or New Jersey, hold a $50 million empty lot and the holding costs bleed you dry every year until you build, rent, or sell. But the Asian playbook grew up in a different world. For decades, across much of Southeast Asia, the tax on undeveloped land was almost nothing. It cost next to nothing to let a prime plot sit for 30 years while the city grew up around it and its value compounded. Then governments caught on and started taxing idle land to force it into use. Wall Street assumed this would finally make the old families sell or move into stocks. They were wrong. Billionaires don't sell, they adapt. Take one brilliant, slightly absurd example, straight from Bangkok. When Thailand brought in a new land and building tax to punish landlords sitting on empty prime plots, vacant land got hit with a steep rate. So what did the owners do? They didn't sell. They didn't build. Overnight, some of the most valuable plots on Earth, right next to luxury malls and train stations in downtown Bangkok, sprouted rows of banana and lime trees. Because the law had a gap, land used for agriculture was taxed at a tiny fraction of the rate. Plant a few fruit trees in the middle of the concrete jungle, and a commercial megaplot legally becomes a farm. Westerners look at that and laugh. Zero yield. Dead capital. A billionaire growing bananas to dodge a tax. But they're missing the whole point, because the land itself was never the business. The land is the anchor. Now for the real engine. In the West, ask a bank for a huge loan, and they'll put your cash flow under a microscope. Revenue, margins, growth. Western finance worships cash flow. Asian banking runs on a different frequency. Walk into a bank in Manila or Bangkok waving a stock portfolio and a hot software business, and the banker nods politely, but hesitates. Paper makes them nervous. They've seen stocks crash and tech get disrupted. Walk in with the deed to 50 acres of prime land, and they roll out the red carpet. In this system, collateral is king, and land is the ultimate collateral. That creates a loop the middle class is locked out of. The rich buy land. They don't sell it. They borrow against it. They use that cheap borrowed money to build the actual business, the factory, the retail chain, the development. The business throws off cash. And what do they buy with the cash? Not stocks. More land, which goes back to the bank for an even bigger line of credit. The empty plot you drive past isn't idle. It's sitting in a vault as collateral. quietly funding a multi-billion-dollar empire in the background. They don't need to build a tower on it. Owning the dirt is what unlocks the money. And land does one more thing a share never can. It hands you control that outlives you. Look at the Ayala family in the Philippines. Today, Ayala Land is the country's largest and most prestigious property developer, but the real power came from a land banking play made generations ago. After the Second World War, as Manila expanded, the Ayalas owned huge tracts of what was essentially swampland and an old, disused airstrip. They didn't flip it, they held it, they master-planned it, and they slowly turned it into Makati, the financial heart of the Philippines. Think about what that means. When you buy a stock, you own a sliver of a company that has to wake up every morning and fight thousands of rivals in a global market. A new AI model can gut your tech stock by tomorrow. But when you own the geography, you're not competing with anyone. You hold a spatial monopoly. When the economy booms, when foreign banks want a headquarters, when luxury brands want a flagship in Manila, they have no choice. They go to Makati, they rent from the Ayalas. The family doesn't have to out-innovate anyone. They just have to wait, because they own the ground everyone else is forced to stand on. Now scale that instinct up to a whole continent. Asia is the most densely populated, fastest urbanizing place on Earth. Every year, millions move from the countryside into the cities. The cities spread outward like a shockwave, and highways, train lines, and airports are forced into what used to be rice paddies. Own the dirt in the path of that migration, and you are almost mathematically guaranteed to win. A share can be diluted, a company can go to zero, but a land bank passes down intact, and it's very hard to seize. That's why across Asia, land isn't just an investment. It's the vehicle a family uses to stay powerful for generations, no matter who's technically in charge. Now step back, because underneath the math there's something the numbers can't show you. And it's the real reason land beats stocks in the Asian mind. It's memory. Run through the last 100 years of Asian history from a family's point of view. Wars that flattened cities, foreign occupation, hyperinflation that turned a lifetime of savings into wallpaper, revolutions that abolished whole classes of wealth, currencies reset, banks collapsed, governments replaced by force. In China in the late 1940s, inflation ran so wild that people hauled bricks of banknotes just to buy a sack of rice. A decade later in the same country, private wealth could be declared an enemy of the people and simply taken. Again and again across the region, paper wealth, cash, bonds, shares, promises was wiped clean off the board. And through every one of those catastrophes, one kind of wealth kept surviving. The family that held the deed to a piece of ground still had something when the smoke cleared. The family that held paper often had nothing. That is the lesson burned into the culture. There's an old Chinese saying, "Yo tu su, yo cai." With land, there is wealth. It doesn't mean land makes you rich. It means land is what wealth actually is. There's a second layer, too, quieter than fear. Land is something you can stand on and point to. A share is an abstraction, a number on a screen that means nothing to a grandmother. A building with the family's name on it is real, permanent, visible to the whole neighborhood. It's wealth you can see and status you can hand down. A stock certificate can never feel like that. And here's the most counterintuitive part of all. Modern traders worship liquidity. The ability to buy and sell in a heartbeat is treated as the holy grail. The patriarchs of Asian dynasties believe the exact opposite. To them, liquidity is the enemy. There's an old warning in Chinese and Japanese alike: wealth does not survive 3 generations, from rice paddies back to rice paddies. The first generation builds it in blood and sacrifice. The second maintains it. The third, having never known struggle, gambles it away. Leave your grandchildren a fortune in a liquid stock portfolio, and all it takes is one reckless heir and one bad night on a brokerage app to erase a century of family history. Land is deliberately hard to sell, and that's the feature, not the flaw. You cannot panic sell 10 acres in Jakarta at 2 in the morning because you saw a scary headline. Selling land takes lawyers, negotiations, approvals, months. By locking the family's wealth in physical earth, the founders are protecting it from their own descendants. You can gamble away a portfolio in a weekend. You cannot easily gamble away a mountain, which is why the two cultures treat money so differently. The Western mind treats money like a stopwatch, day trading, instant dividends, get rich before 30. The Asian mind treats money like a calendar. It's generational. They aren't investing for their own retirement. They're investing for a great-grandchild who isn't born yet. And this is the part a Western viewer has to really hear. The West could trust paper because its institutions stayed standing and its currencies held for a century. That trust was earned. Most of Asia never got that century of stability, so it learned to trust the one thing no war, no inflation, no government could ever make disappear. Same instinct to protect your family. Opposite history. Opposite answer. Which brings us to the uncomfortable present. Because a belief this deep has one fatal condition attached. It only works as long as the land keeps rising. And in the country that believed it hardest, it just stopped. China took the land instinct and pushed it further than anyone in history. Everyone poured everything into property. Developers borrowed insane sums to keep building. And the government fed the machine, because local governments lived off selling land too. The thing every family trusted most became the thing the whole system leaned on. And then it broke. Evergrande, the most indebted developer on Earth, collapsed under around $300 billion of debt, the largest bankruptcy China has ever seen. New home prices in 70 major cities fell year after year for 31 straight months. Two-thirds of newly delivered homes were rated poor quality. Some are half-built and may never be finished. Now remember what that means for an ordinary family. When 70 or 80% of everything you own is one flat, and that flat is illiquid, half-built, and losing value every month, you are not diversified. You are trapped. The asset your whole culture told you was the safe, one turned out to be a single point of failure. The safe asset became the bomb. And it isn't a line on a chart. It's a couple who spent 20 years and every yuan they ever earned on the flat that was supposed to be their retirement and their child's inheritance, and who now own something they can't sell, can't finish, and can't trust. The fortress became a cage. So for the first time in living memory, the belief itself is cracking. In China, property's share of household wealth has fallen from about 67% to 52% in just a few years. Cash is rising. And slowly, cautiously, families are doing the unthinkable, moving money into stocks. In Korea, the young are leveraging into the market instead of into apartments. A grandmother's advice, put it in property, always, is being overruled by her own grandchildren. Not because they suddenly fell in love with the stock market, but because the thing that had never failed just did. Call it the great unlearning, a survival instinct centuries old, being questioned in real time. So here's my take. The lazy story is that Asians are just bad with money, too scared of stocks, too obsessed with bricks, waiting for the West to teach them how it's done. That story is exactly backwards. Land first was never stupidity. It was the correct answer to the actual question Asia kept being asked. When your currency can be reset, your government can change overnight, and your stock market is young and thin, where do you put the thing you can't afford to lose? For most of Asian history, the honest answer was the one thing nobody could print, inflate, or vote out of existence: the ground under your feet. The West could trust paper because its institutions earned that trust over a stable century. Asia trusted land because its history taught it, in blood, not to trust anything else. So the real question was never land or stocks. A stock is a bet on a company. A bond is a bet on a government. Land is a bet on the one thing still there after the company, the market, and the government are gone. And the deepest irony is what China is teaching us right now. The country that trusted land the hardest is the first to discover that even dirt can fail you, because it let the state turn the safe asset into a bubble. That doesn't prove the West was right all along. It proves something harder. There is no truly safe asset. There's only the question of which promise you trust, and every culture answers it with its own history. So let me hand the question to you. If someone gave you $1 million today and you could not touch it or sell it for 50 years, where are you putting it? An index fund? Or a plot of raw land on the expanding edge of a growing city? Tell me your answer and your real reasoning in the comments. I read every one. And if you like following the money until it turns into something you didn't expect, the families, the instincts, the quiet rules behind Asian wealth, Subscribe, because there's a whole map to work through, and we're only getting started. Because a stock might make you rich in your own lifetime. But owning the ground beneath everyone else's feet is how a family makes sure its great-grandchildren never have to introduce themselves.